What do you think are those drivers, those growth drivers that Guido was talking about?
I mean, you have a few sort of what I would call the perfect storm. If you think about what's happening right now, Ed, one, obviously, all of the companies, the legacy media companies, whether we're talking Disney or Warner Brothers Discovery or Paramount or Comcast, like they're all pulling back on their streaming efforts. You know, they've all sort of shifted into let's cut costs, let's raise the price, let's cut back on marketing. And so the competitive landscape for Netflix is far less intense than it was. You know, I think we had this brief period of time during the pandemic where everyone in legacy media, cable network media world thought like getting into streaming was easy. Now they're realizing it is really hard. The markets are no longer paying for subs. They want to see profitability. So they're all pulling back. So number one, competition is lessening for Netflix. Number two, you know, I think the reality is that Netflix investing in lower cost tier, you know, getting out in advertising, having a lower cost service is making a very big difference. And then I think three, one of the amazing things that you're in right now is as the legacy media companies pull back on their own streaming efforts, they're seeing their legacy businesses, cable, television, really under pressure. They're licensing more content. You know, just last night you saw Warner Brothers Discovery's HBO licensing Sex and the City to Netflix. Like everything is for sale. And so the amount of content flowing onto Netflix is exploding. We've really come full circle. It's like Back to the Future day. Netflix. Remember, 5 years ago, everything was on Netflix from third-party companies. Yeah. Then there was nothing, and now we're really right back to it. We're back to that, you know, the heroin needle is back in the arm. Like they can't get off of the drug of licensing content to Netflix. They need it for survival right now. And so Netflix is in this position where they've got more content than ever before, and the competitive dynamic is less than in years. And they've got a cheaper service with advertising to offer to consumers. That perfect storm is why Netflix had their second best net ad quarter in the company's history.
Okay, so Rich, what therefore is priced in? Before we get into basically what seems to be a bit of a bloodbath in the rest of the competitive landscape, what about the leadership position that Deutsche Bank at the moment is saying is fully priced into the stock at these levels? Is it how much further can we run?
The internet is generally winner take most. I was just listening to one of your colleagues talk about, you know, Meta getting back to $1 trillion market cap. You know, there is, I think, tremendous room to run. You know, Netflix is still, you know, you're still looking at a company that there's no reason why they can't add hundreds of millions of subscribers. I mean, the fact that they added 13 million subscribers in a quarter. I mean, they're now at 7 million subscribers in the U.S. You know, I think people not too long ago thought the U.S. was tapped out. Now they're growing the U.S. nicely again, and you know, I think all signs point to them getting to 80 to 90 million subs over time. Europe, you mentioned, there's huge growth opportunities in Europe. So I think the reality is now that they have a lower cost product and they're, you know, they have an advertising tier in markets that represent 80% of ad dollars worldwide. So there's tremendous potential to accelerate growth. I don't think the growth story is over at all. And I think the most important thing to think about is that competitive dynamic eases. That's going to fuel Netflix. And the real question should be, what happens to all these other companies, whether it's Disney or Warner Brothers or Paramount?
Well, Rich, we discussed that 24 hours ago in the context of the WWE deal, right? It answers all of the points you've just made in that it's Raw in the US, but exclusivity on all the other properties outside the US. Where's Disney and ESPN? I don't see them doing deals like the one which surprised us between Netflix and TKO.
The reality is these companies can't compete. You know, they just don't. They're trying to balance their legacy media assets. So whether that's cable networks or linear broadcast TV networks and TV stations, they're all trying to balance. And so the result is as those businesses, which are very profitable, decline, they don't have the same dollars to invest in streaming. And so they're all scaling back. And so the real question that I think we should be asking, you know, we've got all of the major media companies reporting over the next couple of weeks, and I'm sure you're going to be discussing it, you know, Ed and Caroline. The question is, why are you still doing streaming? Like, should you just give up? Like, is there a path to building a scaled global streaming platform that really makes meaningful dollars? Or are you kidding yourself and you're sort of just in that denial phase? And I think that's the real sort of if you think about what's going on in boardrooms right now, you woke up this morning and you're like, holy cow, they added 13 million subs. They're already at this massive scale and they're growing at multiples of how fast we're growing. They're investing more. We're cutting back. Like, why are we doing this? Should we be in the Peacock business? Should Paramount Plus exist? We believe no. How soon do these executives figure out what we believe they should do?
If we don't hear at this earnings, and we do still see the fight on when it comes to more broadly the world of streaming, is now Netflix basically a global TV? Has it already got there, Rich?
It feels, Carolyn, like you've hit escape velocity. I mean, it really feels that way. Now, I will say there's probably a time pre-pandemic, I think there was a point in time where people felt the same, including myself, about Netflix. And then everyone called into question because they saw what was happening during the pandemic, where everyone, Disney Plus exploded and HBO Max, when it was called that at the time, was exploding. And I think everyone got very excited that this was easy to replicate. I think now they're all realizing that they are not capable. They don't have the resources, technical knowledge, the commitment to the business. And so I do feel like Netflix is at that escape velocity. And I think the only question is, how much money are these big media companies going to torch on streaming before they realize this is just not what they do well? They actually just make great content, and they should focus on harvesting as much cash out of that business and not try to be a platform. That's probably where we end up by the end of 24 with several of these companies. They're just going to have to give up.